welcome everybody to Earth Central, the podcast where we invite Earth heroes to discuss on sustainability matters. Today with me, I have Vivian, the co-founder of BlueLayers, and I'm very excited about that. Thank you so much for joining us, and I cannot wait to get very nice insights about carbon markets from you and your experience. So Vivian, if you would like to introduce yourself and what you do on BlueLayers, the floor is yours.
Thank you, Konstantinos, and thank you for having me today. It's a real honor to be on the podcast. So I'm Vivian. I'm one of three co-founders of BlueLayer, which is the industry's first end-to-end software platform for carbon project developers. And really, our customers span the full range of activities, from conservation NGOs to new players that run afforestation, reforestation projects, all the way to durable CDR solutions like direct air capture. And amongst the things that we do for our clients, we enable them to digitize their workflows. We streamline carbon credit management. We maximize their carbon revenues and accelerate the verification process for their credits. In terms of my background, just to give you a sense of how I got involved in all of this, before starting BlueLayer, I spent almost 2 decades as an investor and a dozen or so years of that within climate, as a climate investor, primarily with a company called Generation, which was co-founded by Al Gore. And there I spent time investing from very early stages, from Series A all the way to mature companies, including listed companies. But really my last role within Generation was to start a new business for them. And that business is called Just Climate. And it's a climate-led investment platform across both industrial, but also nature-based climate solutions. Just Climate focused on the hard-to-abate sectors. And within that, of course, the carbon markets were a big piece, both on the industrial side and on the nature side. And I got the chance to speak to the developers on both sides of projects, realized that there was a big need for tools that would really help them to scale. And so we saw this enormous flow of capital coming in as investment into the space, or at least being raised to come in for investment, but the developers themselves needing that capital, but also needing to create the systems that would enable them to use it to scale. So we have been told that what sets us apart is the combination of 2 skill sets. So one of it is domain expertise in climate, and the other one is experience with building software. But really, as a software provider in the space, we see ourselves as an enabler, and we see ourselves as fully aligned in this case with the developers. So we're not a marketplace, we're not an exchange, we don't take commissions, and that I think is something that sets us apart with our client base.
That's awesome. Actually, that's a very nice experience about carbon markets, and also your investment experience also says a lot. So I'm very glad that you're here, and I'm very glad to talk with you and to get all your insights. And I cannot wait to hear more about what you have to say about the carbon markets. So I was checking a bit your LinkedIn profile and BlueLayers profile, and I was doing my small research. And I think that both you and also Orbify, there is an issue in carbon markets that we both focus a lot, which is transparency and trust. I would like to know what's your point of view on that. I would like to know how do you think that the bad press actually affected transparency and trust in carbon markets the last years? And what is the impact on that? How you think about this issue of transparency and trust that's always related to carbon markets, and how maybe we can actually overcome these challenges?
Great. That's a really good question. Maybe I'll take a step back and just start a bit by how I see the issues in the press about the carbon market. And I see 2 very separate things being brought up, right? One has to do with claims. And so the question is, are credits being used in a way by the buyers of those credits that is legitimate, or is the way that carbon markets are being used today leading to greenwashing? And that doesn't really have much to do with the developers themselves. It has more to do around buyers and buyer regulations. And the fact is, historically, certain types of credits have been used in ways, particularly credits with also, questionable additionality, avoidance credits that, are trading at very low price levels. They've been used to make very aggressive claims by some companies that didn't have an intention to properly decarbonize. And that created a perception of association between the voluntary carbon market and greenwashing. And so that's topic number 1, probably less about transparency when it comes to projects and developers, but something we can talk about in a little bit about how we combat. The second one is where, really, developers get involved. And that is that there's been a challenge on very specific projects that have issued credits under international registries and standards where the size of the climate benefit was smaller than the number of credits issued. And that's led to erosion around trust on the quality of credits. And so if we think about this, there is definitely, where there's smoke, there is usually fire, right? And
Right.
so we do believe that there have indeed been projects that have been overissuing. I think, people would agree to that at this point. It's debatable how big the issue is, and also the quantum of that overissuing can be debated, because, of course, a lot of the judgments that are made around baselines and additionality in some of these projects are not always sort of deterministic, right? You have to make certain assumptions, and there's a judgment call there. However, what is important to note is that you have had always some price differentiation in the market, and what we're seeing now is that pricing differentiation is expanding, and so you're increasingly seeing high quality projects trade for higher prices and lower quality projects trade for low prices. There's probably three areas of questioning. One has been additionality. For those that are not familiar, that has to do with whether or not the claimed benefit that the project is producing would have happened if the project had not been in place. And additionality is very closely related to how you pick baselines, particularly in avoidance projects like REDD+. And then you also have permanence and leakage, which is really around what happens outside of the project boundaries. And so if you stop deforesting one area, does that mean that people just go next door and they deforest a different area? And then finally, co-benefits, which we'll talk about later as well. But co-benefits, a lot of these projects claim co-benefits, and those co-benefits are not always documented and displayed. And so clearly data lies at the heart of this issue, the second issue around project developers. And it is the case usually that data collection systems, data aggregation and analysis systems, but also data sharing systems in this industry have been suboptimal. And that includes both at the developer level, but also when they communicate with their partners, like auditors and VBBs, and also when that data gets to the registry, and in what format it gets to the registry. And then further than that, in what format it gets shared publicly, because a lot of the data is available. You could go on the registries and find these very lengthy PDFs, 200-page PDD reports and 60-page MRV reports. But actually, the data is hard to read, it's hard to process, you often can't download it. And so if you're looking to assess the quality of a project as a buyer, as an investor, it's very difficult to do that. You almost need to be an expert of some sort. Maybe I'll pause there and see if is there an issue that I haven't quite touched on.
No, everything is very clear actually. I would just like to know how your project, your carbon developers, how they're facing these issues and how they're solving these issues. For example, talking about additionality or permanence or leakage analysis, that also requires, as you mentioned, data, and you need to be an expert to actually, go through them. But how your clients, how your customers are going through that? Do they have specific softwares? Do they prefer to have some different kind of data? How they work around these issues?
Yeah, that's a great question. We see a variety of systems when we come in to speak to our clients. And so some of them have developed solutions in-house. And so they have some basic software system that combines, let's say, Excel with Airtable, with other capture mechanisms like Google Forms. And they capture that in some form of internal system. Many of them don't have an internal system, and so the data is kept in Excels on local drives or shared drives. And really, to date, I think there's been very few software providers that are offering an out-of-the-box solution. Part of the problem is also that these solutions will never really be out of the box because projects are very different, activities are different,
Right.
and within an activity, you have different ecosystems to cover. And so tropical forest is different, than a kind of northern hemisphere forest. And you end up having, really different ways to try to count things like above ground biomass and below ground biomass. It's a different equation. It has different constants. It has different variables. So that's, a little bit of why it hasn't happened to date. I will say, we don't solve all the problems right now,
Hmm.
and claiming so, would not be true. But we have helped our developers start to put order into the way that they think about data structures and how they capture things. And
Hmm.
increasingly, this will be also not just about the developers capturing and analyzing the data, but also how they share that data forward with stakeholders.
And do you also do you also help them in order to share the data with the registries?
We would like to do that over time. And so
Okay.
the big international registries at the moment have pilot programs when it comes to
Yeah.
digital MRV. And so over time, we are in the groups that are working with those registries to enable digital sharing of that data.
Mm. And what's your opinion in general about registries? How do you think they can actually play the role in order to help with transparency and trust? Because, for example, I see Vera right now is really trying hard to make more transparent capital markets. And for instance, I was scrolling through the website recently and I seen they have this new public comment section. So in case you want to comment publicly on a specific project and say if you think this is qualified and transparent enough, everybody can do so, which I think is really increased transparency and trust. However, it may come also not from specialists. So, how do you think about this approach? What do you think this actually a solution for transparency, or maybe there should be more strict regulations that may actually be more defined to everyone?
Yeah, that's a great question. First of all, I mean, what are registries doing? They are tightening methodologies, I would say. And
Right.
so, where there was a lot of wiggle room, particularly with things like additionality and leakage, that wiggle room is
Yeah.
slowly, narrowing. And I think, Vera in particular has done a good job, both with consolidating its methodologies lately, but also issuing their new ARR methodology, which I think undoubtedly produces higher quality credits than the previous one. I think in addition, we just talked about digital MRV, how we're
Hmm.
integrating a lot more digital first ways of both capturing data, but also how that data is delivered and displayed at the registry. And then the third thing that you mentioned is, essentially integrating third party input. And I think the registries are doing a
Right.
little bit around that, but we're also seeing other pieces of the infrastructure come together. And so you're seeing rating agencies be a lot more active, and the market's sort of relying to them as well to be an adjudicator of quality. But we also need to understand and fully comprehend that even within projects that are issuing credits under Vera, you will have different quality projects issuing a ton of carbon. And that's something that I always love talking about, which is, a lot of people ask, when is this going to be a liquid commodity that just gets traded? And my answer is always, it's never going to be a liquid commodity because one project doesn't equal another project. They'll
Exactly.
always differ. They'll differ in terms of co-benefits. They'll differ in terms of execution. You don't just have one output out of these projects, that can be measured. So, we are increasingly seeing that the introduction of more transparency is creating more price differentiation. And from my perspective, that's a good thing. You could have, a project where the credits trade for $10 a ton, then you could have a similar project, but with more co-benefits or higher quality, that's at $40 per ton. And
Mm.
what the buyer needs to understand is the risk between those two, right? So if you buy the $10 project, it's cheaper, but there might be a bigger risk of leakage, or the permanence might be lower, or it might be in an area where there is, confusion around land rights, or there might be more geopolitical risk in that country. Versus buying a project at $40 a ton, which has tighter quality standards in all of those areas. So some of that will be addressed by the registries, but some of it I think will also be captured in the market.
What's your opinion also about screening platforms? As you said, like we see more and more of them, and Orbify also does screening through satellite data, so in a different way. But we're not considered as a screening platform, but we have, data analytics based on satellite. And I was just thinking, are project developers actually seeing screening platforms as someone that they can trust and can work with, or for them is something that they want to avoid? How they perceive screening platforms?
Yeah, I think I mean, it's a good question. Uh, I think, we need more
Hmm.
screening data. We need more satellite data. I think we'll get integrated at different pieces of the value chain. I don't think the project developers are threatened.
Okay.
And I think particularly not high quality project developers. And what I mean
Right.
by that is generally what we see is that the developers with the higher quality projects are seeking out ways to prove that their projects are high quality. And that's very often why they approach us at BlueLayer. They say, well, we think we have an amazing project, but we want to make sure we get the pricing to reflect that. And so, how can we show that, or how can we showcase that? There's clearly some cases in which technology comes in completely out of context and will say X, and that's just not true because something has not been captured fully in the database, right? So
Right.
I was talking to someone who was talking about uncovering fraud in cook stoves, and they thought they'd found a massive case of fraud because there was six households registered under one person's name, and they went down there and actually, it's a
It
polygamous
was.
society
Yeah.
in Africa, and so there was six households under one man's name
Yeah.
that were registered. So sometimes, you pick up these niggles in the data that when you investigate them, they look like red flags, but they're not actually fraud or they're not actually mismanagement. So you need to be open minded as well, with the use of technology.
And how would you like suggest what, like, let's say you have, the space now to give a message to carbon developers. How would you give them some steps on how to help them and what they should do to have better high quality projects?
Yeah. I'd say the first thing is a lot of the quality gets determined in the design phase of the project. So
Okay.
make sure you set up your project correctly, whether that's finding the right partners, or following best practice, or speaking to others that have, demonstrably high quality projects. That is absolutely key because if you get the project design phase wrong, then everything else follows. The second thing I would say is get data systems in because that's very
Mm,
often, where we see things slip. Uh, in fact, it might be that you need data systems in before you even get investors, because often what we hear is that investors like to see projects that are tracking their data in the correct way. And so, because again, that relates to price and that relates, to bringing your credits to the market. So, as an investor, and I've looked at this, from that perspective, you need to be able to go in and ask for information and get answers back quickly, whether that's an RFP or it's a data audit, or whether an investor asks a third-party diligence provider sometimes to do diligence on the project, and that diligence provider needs to find data structures that capture things in an easy way. If the answer is there's a lot of PDFs on Vera and you have to download then that doesn't give the right impression. And
right.
then thirdly, I would say, if you have the quality, show it. And so be more public and more open to sharing data. Of course, in the beginning, you will
Mm,
get a lot of criticisms, but over time, as data availability becomes more common, we'll also have a lot more standardization in the way that the data gets delivered and gets read. And that will make buyers more educated, investors more educated, consumers more educated, but also give feedback to project developers about what are the things that they need to change to optimize for the quality of the projects.
nice. If I was a carbon developer, I think I would really appreciate that right now. So thank you so much for sharing that. I'm gonna kind of step back to something you said before, about in general climate benefits and actually co-benefits. And I would like to know how you like, because I was reading actually research in the past that's saying that if you don't integrate local communities in your project, in the carbon projects, there is a huge probability that your carbon project is not gonna actually be high quality or it's not gonna work very nicely. I would like to know, and also the same goes with climate benefits, of course, because carbon projects, the main target is actually climate benefits. And I would like to know what's your opinion about local communities and how carbon developers can integrate them in order to actually help the quality of their project rather than kind of, downgrade their quality of the project.
Yeah, that's a really good question. So I'd say integrating local communities is very important for two reasons. First of all, the risk associated with the project, and
Hmm.
so if you don't integrate local communities, you have a much higher chance of things not going well, whether that is because of
Right.
challenges or land rights or leakage. Again, particularly in nature, if you stop doing an activity in one area uh, and you start doing it in a different area, that's the easiest way to create leakage in the project. But if you get local communities on board, you have stability in the project, you have a better chance that the climate benefits actually come through.
Hmm.
But you also, create a longer term framework where the local community appreciates the value of the forest and nature and whatever it is they're protecting or growing. So that's the biggest reason, I think, and the reason that local community involvement ties to quality. The second thing I'd say is that the co-benefits of including the local communities extend beyond climate, and that is something that buyers are increasingly willing to pay for. And you've
Hmm.
seen that, I think, in all the market reports you've seen come out this year. This was the year where co-benefits started being valued.
Right. Yeah.
The most. And so it's not only for reducing the risk of reversion or loss in the climate benefit, but it's also because there's a value to that community improvement that you are incentivizing. So increased jobs, increased income, increased female participation in the workforce. All those are things that are elevating the local community and in themselves are valuable positive externalities, I'd say, of the project.
And what do you think about the local laws? How can actually use them in our benefit?
Yeah, I think that's really geography dependent.
Yeah, that's right. Yeah, true. Hmm.
And so it's hard to make an overarching statement. But
Okay.
I'd say increasingly we're seeing, certain governments in certain geographies take a very positive stance towards the voluntary carbon market and make improvements in the legal infrastructure that are really helping drive more security in the
Mm,
project itself and the climate benefits. And how those climate benefits will be treated and what happens with Article 6 and all of these things.
yeah.
So it's starting to, trickle down and become understood that these projects can be a big source of revenue for very rural communities, usually where governments struggle to have a reach. So the hope is that that continues in that trend.
Yeah, right. Yeah, I hope so. Because I think like not integrating local community is not about just the risk that you may cause to the project. It's actually also the risk that you bring to the local community. And by doing that, we also, all of us have to be more careful. And this is very important to be brought up. So thank you also for sharing this information. Uh, and now I would like to go to the more current and future state of carbon markets. Now you're an expert on carbon markets, so I cannot not ask you about that stuff. Like it's very important, and I'm sure the audience will be super happy to hear your insights. So, what are you seeing in your customer set, and how does it compare to the broader market metrics we're seeing being reported?
Okay, that's a great question. I'll try to answer that in a few different ways.
Very
First of
great.
all, we are 2023 was a transition year. Let's start from
Right.
there. But not necessarily in a negative way. And so in our customer set, we didn't necessarily see a decrease in volumes of credits that were sold, but we did see a big, let's say, shift towards quality and particularly higher quality projects. And so there's two things that were notable. One was there's a bigger gap between pricing for higher quality versus lower quality projects. So projects
Mm-hmm.
where the additionality has been challenged or the leakage has been challenged or the methodology has been challenged, we saw prices come down. In projects that were in sort of the more favored bucket of activities, we saw prices go up. For example, ARR
Okay.
projects, reforestation, afforestation, regeneration. And we also saw that reflected in the demand. And so high quality ARR projects, for example, we think there's a big supply bottleneck at the moment. And what that's led to is a lot of the market moving ex ante, so moving earlier. And so we're
Mm.
seeing larger offtakes, pre-purchases in newer projects that are still undergoing validation. So that are either drafting or have submitted their PDD, but the project has not been fully registered with the registry. And we're seeing buyers that are willing to make multi-year commitments once they've completed diligence. They do more diligence, and once they've done it, they want to have a longer-term relationship with that developer. We're also seeing
Mhm.
more transactions happen direct, which is actually what the market wants. And so if you poll both developers and buyers, they'll tell you that they'd like to have a direct relationship with a project developer from whom they're buying the credits, particularly
Oh,
large
wow.
institutional buyers. And so sometimes what that results in is the data that gets reported not being fully complete because you're often not seeing that many of those direct transactions, you're often also not seeing those ex ante sales of projects that are not registered with the registry. So that's a little bit of what we're seeing in terms of directional move in the market.
And what about the carbon project types? Can you give us a more like, not overview, but can you tell us from your perspective, what is the trends, how it goes? You said that the ARR projects are actually have different prices now and they're getting higher prices. Can you tell us your predictions, maybe if I may say so, for the future and which projects are actually getting more focus right now? Because I also seen that EFM projects also are getting some quite traction right now, and how you perceive that and how you see this market is going there.
Yeah, it's a great question. We're definitely seeing some, market pullback and questioning of certain activities and methodologies, particularly in the avoidance buckets, especially sort of industrial avoidance. I think has been a little out of favor this year. We don't have a lot of customers in that area, so that's not so much from personal experience or from what we're viewing in our own data. But as you said, we're seeing a lot of interest in ARR and IFM. And I think the reason for that is that they're both nature-based and well-understood carbon removal technologies. So IFM typically has, both avoidance and removal credits within it. IFM is improved forest management for those that are listening that are not familiar with the acronyms. But the preference seems to be for those technologies that include a removal component, or those activities that include a removal component. We're also we think that trend will definitely continue. And we think that the big question for RED projects right now is also biodiversity credits, and how those will possibly stack or impact those projects, and also ARR projects, because biodiversity is an important component in those as well. On the less nature-based side, what we're seeing is a lot of interest in cook stoves, and increasingly higher quality cook stove projects, ones that are trading at higher prices that can demonstrate, the data behind their projects. I think for this segment in particular, data is incredibly important. And then finally, in more durable CDR, and so durable removals with a more industrial component, we're seeing increasing interest in BECCS, which is bioenergy with capture, as well as biochar. And there, the question for years has always been availability and quality of the feedstocks. And so what biomass are you using to capture that carbon and remove it? And what we're seeing is increasingly more large transactions in projects that have a captive supply of sustainable biomass. And that's really, where the durable CDR market has been happening today. Although, over time, activities such as DAC and other engineered removals with high durability will also have, a piece of that pie. I think just today, they're less cost efficient.
That's very interesting. So, sorry to interrupt you if you want to say something.
No,
Okay,
no,
sorry. And I would like to focus also in the future, because you mentioned about, as I asked you also about the future and everything. I would like to know what's your opinion about the Symbiosis Coalition, and how do you think such a coalition, it's a coalition, such a coalition actually can impact the carbon markets, and how this can be translated as a more transparent way to do carbon markets, and also in a way that people will start trusting it more, because you see the big names investing there. So they may also believe that this is something that is more trustworthy than it was, let's say, in the past.
Yeah, that's a great question. So for those that are not familiar, we saw the large tech companies, Meta, Google, and I'm forgetting a few, Microsoft. Microsoft is leading the coalition.
I think it was also Salesforce, if I remember correctly.
That's right. Coming together and creating a buyers coalition that's going to buy up to 20 million tons of nature-based carbon removals by 2035. And that's really the comparable here is Frontier, probably on the durable CDR side. So for those that remember, it's about the same size of a commitment if you translate it into dollars. and it's an interestingly similar group of participants as well. And it would be fair to say that those participants are probably less price sensitive than the average buyer as
Hmm.
well, and much more quality focused. And so I think in a lot of ways, Symbiosis is going to set the quality standard for nature removals. They're looking for very high quality projects, primarily in ARR and IFM, and blue carbon, and other nature restoration and regeneration uh, pathways, and they are willing to pay for whatever quality means to them, which is additionality, which you're getting more naturally, within removals, but more importantly, also, biodiversity benefits, co-benefits with local populations, the right type of planting, and so native species, multi-species plantings, and data tracking within those projects.
Right.
And so that's
Yeah,
at
this
least
was,
what we're
yeah,
hearing, is that they are looking for projects that are doing a good job of being able to monitor and report transparently and cohesively on those projects.
I think when it comes to buyers in general, this is something that most of them are looking for. Like when they check projects, that's the main characteristic that most of the buyers are actually very, very aware and they really want to be in the project details. And
Mm.
it makes sense because for them it's an investment. So they want to be sure about how they spend their money. It makes sense in a way.
Yeah,
Um, and I would like now, before a bit going to the closing, I would like to know and to have like a nice, like maybe ending phrase from you, how we can all work together to make carbon markets a better place, a better market at this point. And how do you see this coming all together in the future? And I would like to know how you see all that coming together.
yeah, that's a great question. I think when it comes to transparency and trust, we don't necessarily need more data, we need better data. And to have better
Right.
data, we also need standardization. And to have standardization, we need people to work together. And so that's where I'm
Yes.
taking all of this. But we need different actors to work together to set the standard for data transparency. And really, that will, deliver the higher quality that we need in the market, because the market itself is pricey for quality.
Exactly.
So once you show it, then you'll be able to see it, and then it's going to make financial sense for people to implement quality. So that's where I think the future of the carbon market lies. I think we're starting to see elements of that cooperation already, and
Hmm.
so you're seeing an increasing number of players that are actually working to do that. And so hopefully, we'll see more and more of that coming up.
That's very great to know, and I'm very happy to hear that. And I hope that we can all work together and actually, make that work because it's a great market. And yeah, like thank you so much actually for sharing that with you. I don't know if you would like to share something more about for the end, for their audience, if you would like them to know something better or something from your side, something that you would like to share.
Yeah, I mean, I think, the way maybe we haven't emphasized how important this market is. And so, or at least I haven't said it because I consider it obvious. I spend day in and day out sort of working in the space. Um,
Yeah.
but, without the voluntary carbon market, we won't get to net zero. We won't even get close. And that is, we're increasingly seeing evidence that buyers of credits, particularly buyers of high quality credits, are doing a better job decarbonizing their operations, and we know that there's going to be unavoidable emissions, and we know that there's a supply bottleneck at the moment, particularly with high quality removal projects. And so, if we don't do this, we've completely lost every chance of getting to net zero. So, this is the most important market right now in climate, in my view. It's important to get the market right. It's important to restore trust. It's important to get buyers in there financing projects, because these projects have a lag. And so if you decide in 5 years that you want high quality ARR credits, um, you're going to have to wait 5 years from
Yep.
there to get them, because if we didn't fund the project developers and we didn't support them now, there's not going to be enough credits in 2030 for anybody.
And
So
then nobody's gonna be net zero.
but nobody's going to be net zero.
Yeah.
Exactly. So that's what I wanted to emphasize maybe as a closing message.
This is very important because we tend to forget also about the climate benefits that these projects have. And this is very important to know because, like, as you said, we work in that industry. So we kind of forget about the importance and we forget to communicate that. But yes, nobody can be net zero. Nobody. It's like it's very hard to actually emit everything without having carbon markets. And it's very important to actually make them as transparent and trustworthy as possible. So that's a great closing statement. Thank you so much. Thank you so much for being here. Thank you so much for sharing all the insights. It's very important for me, for the audience, for everybody also in Orbify, I'm sure. And thank you so much for joining us.
Thank you, Konstantinos. It's been a pleasure being your guest. I appreciate the dialogue.